Welcome back. Today we're talking about business financing, specifically using a United States Small Business Administration or SBA loan through one of your local banks. My name is Thomas Rockwood, and if you have any questions whatsoever about SBA financing or would like more information, please reach out to me directly at thomas@LifeForth.com. Today specifically, I wanted to go into a little bit more depth into some of the two programs that you have access to within the SBA. One is the SBA 7A loan, and the other is an SBA 504 loan. Given your specific circumstance and what you're trying to use loan proceeds with, you might have an option to use both or one of the two programs at your disposal, and the rates and loan structures are typically very different between them. So I wanted to answer some of those questions that I commonly get in regards to rate, structure, and the SBA 504 versus the SBA 7A loan. I think most businesses, when they're out looking for loans, especially in a business acquisition or in a startup scenario, they're going to fall more commonly into an SBA 7A loan. And the reason really is when you're doing a business acquisition, there's a heavy portion of loan proceeds that are going to be going towards purchasing goodwill or intangible assets. When you're doing a startup, typically you're not buying a lot of fixed assets. You're going to be buying inventory and some equipment. You're going to need a lot of working capital to get your business off the ground. And so those assets really are short-term in nature, and a 10-year loan term works well for those assets when you're using an SBA 7A loan. The 7A loan is a broad brush tool. It's kind of the way I like to look at it. You can fund almost anything with it that your business might need. So from working capital, from inventory, if you need to build out furniture and obtain fixtures for your building, if you need any specific equipment, you can buy real estate with it. You can do a lot of different things with an SBA 7A loan. Most 7A loans are on probably 10-year terms unless there's real estate involved, in which case your term of your loan can go out to 25 years. If you're using a lot of proceeds to fund intangible assets or short-term assets as well as that, you might find a bank that's going to do a blended term. So your real estate at 25 years, but then the rest of your stuff is at 10 years. So you might end up with an 18-year loan or a 15-year loan, depending on how much loan proceeds are going towards long-term assets versus short-term assets. Specifically when it comes to real estate, you can obtain an SBA 7A loan and amortize that over 25 years, the whole amount, as long as the majority of your loan funds are going towards the real estate purchase. So if you've got an expensive piece of property, or most of your project is to fund your real estate acquisition, and most of your loan funds are going that direction, you can probably get a loan term on an SBA 7A loan for 25 years, but still include some working capital, maybe there's some growth that needs to be funded for working capital components. Maybe there's a small piece of equipment that needs to be acquired as well. So some proceeds are going towards short-term or assets that aren't going to have a useful life of 25 years. But if a majority of your funds are going towards real estate and the long-term asset, then you can take an SBA 7A loan and stretch it out over 25 years. The other program that the SBA offers for fixed assets specifically is the SBA 504 loan. Most of the SBA 504 loans have a useful life if you're using real estate, have an amortization or a term of 20 years for a portion of it. And then there's a second loan that the bank has, and that has to be at least for 10 years. So you got, with an SBA 504 loan, you're going to put in a portion of funds. The SBA will have a portion, and then the bank will have a portion. Specifically, as it is today, the borrower, the business, has to put in 10, 15 to 20%, depending on the type of business you're running and where you are in that business life cycle. But let's just use a 10% cash injection scenario. So the business will have to put in 10%. The SBA will fund 40%, and then the bank will have a note for 50% of the loan. So in that case, the SBA portion, or 40% of your loan, and if we use $1 million loan project, you're putting in, or total project, you're putting in $100,000. The SBA will have a $400,000 loan to the business, and then the bank will have a $500,000 loan. So in a sense, you have $900,000. The best part about this from the business perspective is that there's no refinance necessary for the first 10 years, because The SBA component is over 20 years at a fixed rate, and it's no balloons, no prepayment penalties on that piece. On the SBA 504 loan, the SBA component is a fixed rate for 20 years with no balloon payments. On the bank portion, the 50% portion, that has to be at least over 10 years. And so there would be a balloon for that 50% sometime around the 10-year mark that you're going to have to refinance. But some banks will actually do a 20-year term and no balloon necessary in that time as well. So you've got two different loan structures. Primarily, SBA 504 loans are involved in real estate or long-term heavy equipment acquisitions or projects that involve acquiring that for the business. 7A loans, you can use them for real estate, but you can also use them for a broad range of other things. I would say currently, from a rate perspective, SBA 504 loans have a fixed rate for the SBA component. The bank portion is really up to the bank, and I see rate structured at fixed rates at 1 year, 2 years, 3 years, 5 years that might adjust. Some banks will do rates fixed for 10 years. So that's going to be a bank by bank appetite. So really, talk to your lender, talk to a couple lenders, and figure out what they're willing to do given your business's scenario and what you're trying to pull off. 7A loans, some banks will fix a rate for 1, 2, 3 years on the 7A loan. Some banks will fix them for the entire term. Most banks that I see currently in the market, given what you're trying to do with it, they will do a quarterly or monthly adjusting rate. So you'll have a margin over prime. Prime right now is 3.5% as the time of this recording. And so they'll do prime plus 2.75, which is the max rate or lower. And that'll adjust either monthly or quarterly. Some banks will fix it for a year, 2 years, 3 years, depending on the project and what you're trying to do with it. So that's hopefully heading you down the right direction in terms of the types of project you're doing, the types of interest rate and terms that you can expect when using an SBA loan to finance your project. Again, my name is Thomas Rockwood. If you have any questions whatsoever about SBA financing, or you want to have more in-depth conversation about your specific project, please feel free to reach out to me directly. You can reach me at thomas@LifeForth.com.